A day after one of the most chaotic scenes in U.S. political history, the dust has now settled. We still have some calls for invoking the 25th Amendment, and so who knows what we have in store for the next couple of weeks. But one thing we do know is that the financial markets have been taking it all in stride. Who would have figured that on a day when the Capitol was sieged, the U.S. stock market would be up, and a day later we would be hitting record highs across the board. Today was a fantastic day for a lot of the growth stocks especially, but even the S&P 500 was up 1.5% here today. So we'll take a look at all of that, see what it means for our posture. We'll then get into a trade application example from the consumer discretionary area, which very well might benefit if we end up having further stimulus checks here in the United States. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee, and it's January 7th, 2021. First of all, if you're new, remember to go over to YouTube, click subscribe on our channel, then go down to our description area and sign up for our email distribution list. We're also heavy users of Twitter. If you're not following me there, be sure you're doing so. My handle is @BrandonVanZ, and we really appreciate those of you that click like and retweet on these Market Outlook related tweets. And then last but not least, we have a presence over on Facebook. And so feel free to check out our group at that web address you see in the logo in front of you. All right, let's jump into our charts here. And as you can see, I've got a slightly different chart pulled up, and this is chart 6D. I tend to pull this one up when we have a move of at least 1%, just to get a general sense, put things into context as to how big of a move it was, and whether it's something that is extreme in nature or just another typical day. Well, I think the takeaway here today is that with a brand new all-time high, it's impressive in light of the news that surrounds the price activity. You'll notice down below here, this green candle does get up and over this blue horizontal line, which tells us today was at least a 1% up move here today. But a reminder of how things have felt here recently compared to where we were back in March and April. If you're a newer trader, you might have felt like what we've been going through lately has been wild and really volatile price action and that sort of thing. But the truth of the matter is that is not the case. And this is a graph that can help you kind of absorb that educational tidbit, just because you can see we were having lots of days where we were making 3, 4, 5, 6% days, either up or down back in March and April. So anyway, the train just keeps on a rolling higher here, as you can see with the price action up above, all-time highs in the S&P 500. Down below, you will see that the VIX had quite the pullback here today as well. That was about a 10% drop. I know you don't really measure the VIX, which is already a percentage by a percentage, but at least gives you an idea. And we're back to some of the lowest levels that we've seen in quite some time there on the VIX as well. So anyway, if you're a bull in this market, you've been blessed. And I think we should all feel quite fortunate for that. In fact, one of the things I was mentioning here just a moment ago on Twitter was, and first of all, thank you to those of you that clicked like for me the last time I did the video on Tuesday. I really appreciate that. Got up and over that 100 metric that I usually like to shoot for. So thank you to all of you that go out of your way and take the 5 seconds to do that. It goes a long ways in our eyes and helps us justify the amount of time that we spend making these videos. But here's what the reason I wanted to come over here and show you this post. On Tuesday, when I was with you, I was discussing how we had this new tool at Market Scholars for our premium members called the Stock Selector. And I took a screenshot of just the top 10, but I was telling you on Tuesday that it actually covers 1,000 stocks, and it stack ranks them from the best under our proprietary scoring method to the worst. And so I just took a screenshot of the top 10 just to kind of give you an idea of kind of what that would look like, just to, for promotional purposes more than anything else. But it was interesting because as I looked at the stock market today, I was thinking to myself, a lot of those names that showed up there seem to be doing awfully well. So I went back and checked, and sure enough, we had some massive movers of those 10 stocks. And remember, this was not posted like today because I knew the market was up. This was as of Friday that I posted this. I actually posted it on Twitter on Monday before my class, but the screenshot was taken on Friday after I did the updates. That Stock Selector with my proprietary ranking method I use on Fridays after the market closes each week. But anyway, since this was the first week I had kind of launched it publicly, wanted to at least post that screenshot on Twitter. So I looked at the returns today, and I was kind of, my jaw was dropping a little bit there as we saw Jamia, which was the number one on this screenshot here, up 14% today. Tesla, which was number two on the screenshot, was up 7.94% today. In fact, Elon Musk became the world's richest person today. I can hardly believe that, right? It's an amazing achievement considering the lack of profitability of Tesla in many cases, and they're actually larger than Facebook at this point. But Elon Musk himself overtook Jeff Bezos today as the world's richest person. But we had some other great movers as well. Enphase was up 5%. Fiverr was up nearly 5%. Editas was up 11%. Peloton was up 7%. Sonova was up nearly 5%. So I calculated those all out, and the average return for the top 10 on the stock selector tool just today alone was over 5%. And the S&P 500, as I mentioned before, was up just close to 1.5%. So anyway, almost 3 times the return in the top 10 of the stock selector tool than what the market itself achieved today. So as I said here, those of you that are premium market scholars, make sure you're using this tool as a new weekly routine going forward to look for opportunities. When we have big days like today, we're going to find that those stocks that were already achieving success could very well have spectacular moves, and that is kind of part of what we experienced here today. Also, some good news on the front from the top-down trend trading class here today. For the 6th time in the past year, we doubled our money in a stock, and we sold half of those shares, and that honor this time goes to ALB. And remember, we just did this on December 22nd with Chewy. So here we are less than a month later, finding another stock that we've doubled our money on there, where we're going to sell half of our shares. I've already done it, sent out the information via Telegram, and we're going to keep the rest in our so-called coffee can. So if you're interested in trend trading and the approach that I take there, where we do use that stock selector tool, I would encourage you to join my Monday top-down trend trading class. We've had a spectacular run of success here recently, and we're hoping that that will continue. We've even had some pretty good success in this market outlook video here recently. Some of you that caught my Telegram earlier today will know that we closed down both the CYRX and CAI swing trades that I had done for you as trade applications in this presentation in the past as well. So the bulls were out in full force today is the main takeaway there. And you're just seeing some just eye-popping types of numbers that were taking place. Also, while we're over here on the internet, I always like to point out that we've got a lot of great resources for our clients. We had some amazing questions here today in my question and answer session. It actually took me about 3 hours to get through them all. But if you're interested as a premium member, here's the lineup of questions that I received today. Lots of stuff in there, everything from looking at how to set up your PL statements and a review of Gilead and BPFH, Boston Private, and Northern Trust was another question I got, and how to interpret some of the charts that we use. Also, a conversation about Antero Midstream, how to set up different workspaces on the Thinkorswim platform, how to do some of our stink bid orders that we do in our dividend growth investing class, and then a conversation about what happens if Alibaba gets delisted and how do we handle a situation like that. So anyway, that recording is now posted for those of you that are premium members. And then tomorrow, David will be doing his very popular technical analysis class at 1 p.m. Eastern Time. So if you've ever wanted to be taught technical analysis by a chartered market technician, that is your opportunity every single Friday for those of you that are both plus and premium members of Market Scholars. All right, let's get back on track with our charts here. Wanted to show you here on the market forecast grid what things look like right now. And it is incredible to see multiple charts hitting all-time highs all at once, and that's the type of day that we received here today. The NASDAQ in particular was quite impressive, up 2.56% here today. And you can see with that move, it got us up and over that prior resistance area that we had been dealing with for the past week or so. And so it was a very impressive break considering the percentage move itself and the fact that we closed near the high of the session. Of course, we retain our strongly bullish posture, which we've been in ever since we crossed into that territory back here on November 16th. It was another impressive day there with the S&P 500 breaking to new highs. The Dow Jones wasn't quite as impressive. It was only up 0.69%, but nonetheless, new all-time intraday and closing price highs for the Dow as well. And then once again, take a look at the Russell 2000. That thing has been an absolute rocket ship for months at this point. And some of you will recall when I did the video on Tuesday, I was a little bit surprised live, so to speak, when I was recording at least. I did not know when I went into the recording that the candle was missing on the Russell 2000, and it's still missing. So I don't know what to make of that. I don't know if the folks over at Thinkorswim, TD Ameritrade are aware that that is the case. But anyway, this candle went from January 4th. January 5th is missing, and it immediately goes to January 6th. But as you can see, both the 6th and the 7th have been absolutely stellar days for the Russell 2000, and it was able to curl that green line back higher. Remember the conversation we were having a couple days ago is it was on the verge of kind of coming down below the 80th percentile, in which case we would have seen a color change on the chart, but we kind of got saved by the bell here in the last two sessions, and with the Russell 2000 rallying yet again to all-time highs, now you've got a little bit of wiggle room there with where the green line is positioned and where the 80th percentile is. So, could probably sound like a broken record, but it's still all systems go. If anything, the question is, have we gone too far too fast? I know David's been doing a great job of tweeting out some information regarding that conversation, and that's why we look at these candles every single day the way that we do, so that way we can try to help identify that. We're not going to predict it ahead of time necessarily, but hopefully by kind of having a routine where you're listening to these presentations every single day, you're going to be more plugged into the market than somebody else that figures it out weeks or in some cases maybe months later, that, hey, things are starting to deteriorate. Right now, they're not. Right now, we continue to be wildly bullish, which is a wonderful thing. Let's go ahead and by the way, one other thing I was going to mention real quick, our performance labels up at the top have gone missing here. And I asked one of our experts here at Market Scholars, Clarence Carr, about that. And what he determined was last year was a bit of a funky year where, I don't know if it was a leap year or what, but anyway, there was 253 trading days rather than the traditional 252. And the scripts were based upon a 252-day year. So I think he's done some adjustments there. I've got a little bit of free time tomorrow where I'm going to work on some of those charts and things like that. So for those of you that are premium Market Scholars, and if you've noticed those missing performance labels there at the top of the market forecast charts, that's probably the reason behind it. And I'll work to get things kind of squared away and then get you guys the new shared links there that you can find on our traditional chart importation video area within the tools tab on our website in the premium resources area. All right, let's go ahead and take a look here at the 3 green arrows chart now and see if we have 3 green arrows on any of our major indices, and the answer to that is yes. We actually have it on 2 different indices right now. We have 3 green arrows on the Dow Jones, and we also have 3 green arrows as of today on the Russell 2000. You'll notice that the Russell 2000 got its green arrow back on the MACD histogram, so we now have positive momentum going into that name once again as we're breaching those fresh all-time highs there. On the S&P 500 and on the NASDAQ Composite, those two were still waiting for a crossover there of the 0 line on the MACD. Actually, hang on a second. I do see that here on the S&P 500, we were able to achieve that today. So I'm going to have to take a look at that as to why that script isn't plotting a green line there. Again, it might have something to do with what I mentioned before with us seeing a leap year kind of affect some of the scripts there. But on the NASDAQ, I can say that we do have the NASDAQ Composite MACD histogram still with a red arrow at this point. So another up day or two, and we might very well get back to 3 green arrows on that one as well. All right, let's go ahead and do some 12 grid analysis now. And I'm going to pop on over here to chart 5A to get that conversation going. All right, so remember when we're looking at these 12 grids, the background color is going to tell us what the current posture is using the intermediate line on the market forecast technical indicator. And so as we look at this first set of 12 grids here, you'll notice that we have quite the mixed bag. We've got plenty of green and plenty of pink to discuss. Let's maybe start with some of those pink charts. And one of the leading conversations that we've had for months at this point is the deterioration in the US dollar. And that has led to outsized positive activity from a lot of the commodities and other foreign securities that are out there. Well, today was one of those days where you had a little bit of a reversion to the mean. You'll notice the dollar was actually up today. It was a pretty sizable day. 0.58% is a decent day for the US dollar. So dollar did have a snapback rally today. Notice yesterday you had an oversold cluster. So we should not be surprised at on a day after an oversold cluster, you get a big kind of reversion pop higher. The question is it trend changing in nature? And right now, my assumption is that the answer to that is no. If it would have popped above the moving average, then I start kind of altering my thoughts regarding that. But at this moment in time, I'm going to assume that this is just a typical response to an oversold condition, yet the downtrend of the US dollar is going to continue to hold. And if that's the case, then you might very well have continued outperformance out of commodities like oil, which has been extremely impressive, and perhaps even gold, although gold hasn't been nearly as impressive as what we've seen with oil here recently. And you might very well have continued outperformance out of foreign stocks versus U.S. stocks. So the foreign charts are the two up here. So this is the developed foreign chart and the emerging foreign chart. Notice that both of them underperformed the S&P 500 today, which again probably could have been assumed considering the dollar was up today. So on a day when the dollar is strong, you might find that the U.S. stock market slightly outperforms those foreign securities. On the days when the U.S. dollar is down, then you can make the assumption that the foreign securities would outperform U.S. ones. And of course, it doesn't work like that, like clockwork every time, but those are basic high-level understandings of what your kind of assumption should be going into things. Now, another chart that is quite bearish here is one that I'm quite pleased with, as you can imagine, and that is TLT. That's the chart in the middle rung off to the left here. And you guys that were listening to my presentation on Tuesday will have known that that was my trade application example for Tuesday. And boy, oh boy, did it turn out to be a good one because that thing has absolutely torpedoed to the downside. We placed our trade right here, and remember it was a bear call spread. And 2 days later, that thing has absolutely collapsed. It's one of the biggest two-day moves you're ever going to see in the U.S. long bond there. And of course, went the direction that we want, which was to the downside, which means the opposite is also occurring, and that is that interest rates are spiking right here. Notice this chart in the lower right-hand corner, and we have this really nice pop, boom, up and off of that moving average right there. We actually had a pretty good conversation about that here in my classes, both today when we were talking about Northern Trust and also yesterday when we were having a conversation about some of the interest rate sensitive factors that are out there. But this is a chart that we've looked at time and time again in this very presentation where I said, just for a second, pretend that this doesn't say TNX on the chart and it says some other really exciting growth stock on it instead, and we would be salivating over this chart. But because it's boring old interest rates, we don't really think too much of it. But the truth of the matter is it's highly influential when it comes to different asset classes out there. And it's part of the reason that the banks are absolutely exploding higher here in the last few days. So one thing that is clear so far in 2021 is that some of those beaten up value areas like oil and banks have been some of the best areas to be hanging out so far this year. Whether that lasts or not, we'll see. But we're off to a pretty good start so far. So keep your eye on that story. As I was mentioning to the folks in my question and answer session here today, those of you that have been in my dividend growth investing classes for the last 2 years, you should be filled to the gills on financial stocks right now. So you should have been waiting for this moment in time. Now, whether it takes us forward from this point to ever higher levels, we'll see. But the point is, the financials have been so far out of favor in the last 2 years that they have become an weighted portion of our dividend growth investing portfolios in nearly every single one that I put together in the last 2 years. So I, for one, am cheerleading the banks and the brokers and the insurance companies and the asset managers and all of those companies higher. If this is going to be a year where the financials outperform, I think a lot of you are going to end up having a smile on your face in the end. So we'll keep our eye on that story going forward there as well. So all in all, a lot of our same trends are kind of holding as to what we saw more recently, which is we continue to have downtrends in the long-term U.S. Treasuries, downtrends in the U.S. dollar, and we have uptrends in some of our commodities, in interest rates themselves, and in foreign securities. Let's go ahead and do some sector analysis now. And for that, we're going to come over here to chart 5C. So this is going to be our sector 12 grid. So remember, on this one, the chart in the upper left is actually the S&P 500 itself, and then the remaining 11 charts after that are our 11 sectors that make up the U.S. markets. And as you can see here, we have mostly green charts on the board, which is a wonderful thing. The only two exceptions to that are the consumer staples and the real estate area, which both of those are relatively smaller areas of the market. So we don't necessarily mind having them be bearish if we can have the rest of the sectors be bullish. Here's what I was mentioning before, by the way. The big day for the banks was yesterday. That was an absolutely explosive day where the banks were up like 6% in the middle of the day. And we're talking massive market cap companies like JP Morgan, Wells Fargo, Citigroup, Bank of America, along with a lot of those smaller asset managers and insurance companies and the like. It was an explosive move there for the financials. A lot of the other sectors that went up yesterday were somewhat smaller in nature, your utilities or your materials companies or what have you. So that's not as impressive. But the financials still are a sector that can kind of punch above their weight class, so to speak. They are a big time player in the markets. So to see them working, it's kind of the lifeblood of the market itself. You really want to see the financials participate. And right now, they've got an extra gear. So we'll like to see that little breakout that we saw there on the financials. And remember, the financials had already moved into the top 3 slot of our sector selector last week. So if we come over here to our website and go to tools, not only will you find our stock selector there, but you can also find our sector selector there. And on the sector selector, for those of you that are premium members, you might have noticed that in mid-December, the financials were down here in the 7th place. Now, Friday of last week, when I took this screenshot, they had made their way all the way up from number 7 up to number 3. So we already had a heads up even before this week's trading that there was going to be some positive vibrations going into those financial companies. So it's good to see, and I do hope that it continues. There's going to be a lot of interesting opportunities amongst once beaten up stocks with maybe above average upside potential from that particular sector in the months and in the years ahead. So some of the other areas that continue to impress here, you will see that technology was a star today. No surprise there after what we just saw a moment or two ago on the NASDAQ composite itself, but technology was up 2.7% today. It's not at a new high, so it did pull back a little bit more aggressively as well, so we got to take that in context, but nonetheless, a nice positive move off of a rising moving average right there, right? Good bounce. We had a pullback to the rising moving average. Today was the day we needed a response, and boy, oh boy, did we get it. It was a really brilliant, positive response to the upside. Discretionary is truly impressive. Now, you'll notice over here we've had 3 straight mega moves there on the discretionary chart. We were up another nearly 2% on discretionary today. Now, remember, part of the story is what I had mentioned to you guys last month in this presentation, which is the discretionary sector in this form, XLY, this is the market cap weighted version of it, is really dominated by 3 companies these days. It used to be dominated by 2, which was Amazon and Home Depot. But last month, when they let Tesla into the S&P 500, it immediately became a highly influential member of not only the S&P 500 itself, where they passed Facebook in size today, to becoming one of the most influential members of the discretionary market cap weighted ETFs like XLY. So right now, Tesla is probably neck and neck. It's getting right there, at least closer and closer with Amazon's market cap. And so a big reason for this huge move that we've seen in the discretionary sector itself is a direct reflection of having Tesla in the S&P 500. And by the way, a special shout out to Cathie Wood over at ARK Invest, because she would come on to CNBC a year or two ago and people would ridicule her with her outlandish price targets on Tesla. And one of them, I think it was a $4,000 price target. And on a split adjusted basis, that's what they hit today when Tesla hit $800, because again, they had a split along the way. So I find it fascinating to see how people initially responded to her and now how she is being held up in a much higher light. So congratulations to Cathie Wood for sticking to her guns on that call. But nonetheless, the Tesla effect is certainly helping the discretionary area along. We will be looking at a discretionary stock as our trade application example here in just a little bit, by the way. Other areas that performed well today, energy has been a sneaky, strong area of the market, and energy is not quite to where it was back here in middle of December, but we're knocking on the door of that. One or two more good days, and we're going to be back to multi-month highs, even on the down and out oil and gas sector. And remember, that's a change of temperature from what the markets have been experiencing in recent years as well, where energy stocks have been down and out for as long as we can remember. And now all of a sudden, this is the first time they're making a legitimate move for as long as this has lasted. We've had other moves in the past when there's been random things that happen, like a droid bombing or a drone bombing on a refinery in Saudi Arabia or something along those lines, and oil stocks spike for a day or two, but then they go right back into their downtrend. This one has felt different because it's lasted a lot longer. When you look at this chart here, this is a 3-month chart, and we are now basically 2 months in to a chart that is mostly an uptrending 30-day moving average. So it's been much more resilient and impressive this time, and therefore it may have some upside potential there. Whereas the past moves higher in oil and gas stocks would have already failed by now. The fact that this one hasn't is rather impressive. So keep your eyes open for those opportunities, even in that beaten up area of the market. You also had a pretty significant move out of healthcare here today. Healthcare was up 1.3%, and obviously a brilliant looking chart there up here to multi-month highs. You know, one of those stocks that I had mentioned in the stock selector tool was Editas. That might not be a company that you guys are all that familiar with, but this is one of those CRISPR technology companies, and it was up 11% today. This stock is absolutely just rocking it. As you can see here, it's up 188% in just 3 months' time, but their direct competition, CRISPR itself, CRSP, also had an absolutely beautiful day. And you guys have seen me tweeting about this one countless times in the last 6 months to a year. This is a stock I've had on my radar for a long time, and I'm absolutely loving these moves that we're seeing here. Today, tacked on another 18%. So, that is a sign of the kind of the temperature of Wall Street right now. It's willing to take risk. In fact, another one that really was capturing some attention on Wall Street today, not in the healthcare space per se, but kind of in that ilk of a highly speculative, potentially disruptive technology, 3D Systems here. This is a stock that used to have a huge fan base, probably 5 or 10 years ago, and then it really died off for a while. Well, today it came back in a major way. This stock was up 100% today alone, 104%. One of its competitors, SSYS, so that's Stratasys, also had a phenomenal 38% day. So we are seeing moves that are, like dreamland type of material here in this current market. How long it lasts is anybody's guess. We might very well be in the early throes of a legitimate bubble that's forming here. And I haven't even talked about Bitcoin yet, right? We've all seen the news on Bitcoin. It's darn near $40,000 per Bitcoin, as that has been a speculative phase that has caught the attention of Wall Street as well. So wild times, not only politically in this country, but also here on Wall Street. Let's try to calm things down here with our trade application. And for that, I'm going to come over here to our swing trading chart, and we're just going to pull up a boring old dollar store retailer, and that is Dollar Tree. And I'll kind of explain the trade that I've already done. Now remember, trade's already been placed, it's already in the account, and it's already been sent out to those of you that are premium members of Market Scholars. I send out my trades while the stock market is still open, so that way you guys can look at them before everybody else gets the opportunity who watches the free video later on at night. So if you're not taking advantage of the Telegram app, remember, if you're a premium member, you would go to marketscholars.com, go to our Tools tab, and then click on Premium Resources, and in there you'll see a link for the Telegram. But anyway, here's what was catching my eye with Dollar Tree here today, and I actually saw quite a few charts that looked somewhat similar to this. I ended up going with this one because it had a couple of extra elements that I thought were interesting, but there were a number of charts where today was kind of the breakout day. And it's one of those breakouts where you don't feel like you're too late to the party. I think we've all, looked at those breakout charts in the past, and the stock is up like we saw with 3D or Stratasys, 40% or 100% or something like that. And yeah, that's a breakout, but if you weren't involved in it beforehand, it's not going to do you a whole lot of a good. So sometimes it makes you feel a little bit more calm as a trader when you find a breakout trade that is just past its breakout zone, and that's what we have here with Dollar Tree. You can see that it closed here close to 115, which was just barely above where it was trading on an intraday basis back here on December 3rd, and then kind of had almost a double top type of feel to it with another candle there on December 17th. So today, at today's close, we not only closed or not only breached it on an intraday basis, but we closed above those previous intraday highs there. Not only that, but of course we've got a nice clear bounce up and away from that rising 30-day moving average there. And the one thing that this chart had that a lot of others that were breaking out today did not have is this one also has kind of an interesting feel to it with its potential gap trade philosophy here. And what I mean by that is you can see that Dollar Tree had this earnings announcement back here in late November, and the stock got gapped up huge on that day. And ever since that day, the thought process is that the low of that gap up day will represent some sort of a support level for those of you that are trying to kind of put your bogey somewhere on the chart. And we almost breached that. The theory is if we do come down below the low of that candle, then there will be a gap fill all the way down to here. And you can see that that almost happened right over here on this candle on January 4th. But the low that day was 105.31. The low on this candle was 104.98. So we were saved by a few dimes there before we actually could kind of implement the fill the gap philosophy. So now that we've bounced up and away from that, now the thought process is, yeah, there might be legitimate buyers in the wings at right around 105 that want to purchase this security, and that's the reason that it could not breach that level on this particular candle right here. So now we've got this reversion move back to the upside in the last 3 sessions, and it's been so aggressive that you actually had that breakout to new highs here today. You also have a little bit of a feel of kind of a bullish near-term divergence signal that's kind of setting up. You'll notice that we have obvious higher lows on the blue near-term line down below at around the same time that we had kind of this slump in price itself. So that could be yet another bullish reason to kind of look at this one. You can also see that it's easily outperforming the S&P 500 over the last 3 months. And as I mentioned in the intro, who knows, maybe there's a little bit of trader philosophy behind this one that, if we all get some stimulus checks in the mail here soon, that, the retailers like Dollar Tree are going to be one of the areas that benefits from that. So anyway, setting this up as a 1-for-1 swing trading opportunity. You can kind of see my levels there on the chart, but if you need the precise numbers, that information is available to those of you that are premium members in our Telegram app. So that's what I had for you here today. I hope you enjoyed that presentation of the trade application example, along with all of the other information that we were able to uncover here in tonight's video. If you got benefit out of this video, and if you want David and I to do this video every day, if at all possible, the one thing that we ask out of you is just simply click like for us there on Twitter. As long as we get good support from our audience, we'll continue to do them. And if we don't get good support, then we'll have that conversation as well. But you guys have been great. Keep up the great work on your end, and we'll keep on churning out the content here for you as well. So David will be back with you tomorrow. I'll get the new rankings on the stock selector and sector selector updated tomorrow night, so be on the lookout for those. And then I'll see you all here in the YouTube video next Tuesday. So with that, I want to wish you all the best of success with your trades and your investments. Goodbye for now.